Hi there. Is your new mortgage brokerage plans the envy of all your former loan officer coworkers, or are you struggling to get it off the ground? Well, if it's the latter, listen up. I'm going to help you avoid the common mistakes that I made when I started my mortgage broker journey, and I'm going to show you how to strike gold with yours. My name's Megan Marsh, and today I'm here to share with you some insights about launching a business as a new mortgage broker. Having worked in the industry for 20 years, I've noticed that there are some very common mistakes that loan officers who are starting out make. So I'm going to highlight 7 of them today. So stay tuned as I'll be sharing my tips for avoiding those kinds of missteps and setting yourself up for success instead. Don't lose money closing a loan. Sounds like it makes sense, right? But let's jump right in with one of those big traps that tend to really get new mortgage brokers. It did for me. And the desperation to secure a closed loan. Now, I get it. When you're starting, it's natural to be anxious and to get your first clients into your pipeline. And it almost seems sensible to lower your interest rates to attract more clients, right? And offering too low of an interest rate may seem like it's a good way to stand out from the competition and attract those first few clients. But in the long run, it's a strategy that could severely hamper having profits in your business and having a long-term business that lasts over the years and allows you to grow. You see, while a lower rate may attract some clients, it also squeezes your profit margins, making it harder to grow your business or even keep it afloat. Like if you want to spend time away in another island or country, you're going to need to hire team members or get virtual assistants, and you're going to need more margins when you're ready to do that. In this business, it's not just about getting clients, it's about building a profitable and sustainable brokerage. So don't sell yourself short. Stick to your rates and focus on offering quality service and being that expert. Believe it or not, clients are willing to pay for value, and providing top-notch service, you're going to build a loyal client base that keeps coming back to you. The second mistake is processes and organization from the start. So that second mistake that a lot of new mortgage brokers often fall prey to is disorganization, specifically with regard to paperwork and client documentation. The mortgage broker industry involves lots of paperwork, and conducting business in this haphazard manner is only going to end up in chaos, because a disorganized approach may not only cost you clients, but it can also cost you leads, legal trouble, not being compliant, having trouble bringing team members on. It's crucial to have a streamlined, efficient process for handling paperwork with not only your clients, but also your business on the back end. So here's how you can avoid this pitfall. Invest in a solid customer relationship management system, a CRM. A good CRM will help you keep track of your clients, their paperwork, the communications you have with them, and the status of your loans in the pipeline. It'll streamline your workflow, and it'll make your business more efficient and professional. And secondly, establish a clear process for your business. This will save you and your clients time in the long run by pre-qualifying, so that you can make sure that clients are working with clients who are serious and ready to move forward. And lastly, don't be afraid to delegate tasks and outsource things, which is another reason being organized is so important. Hiring a virtual assistant or using a document management system can free you up to focus on what you do best: connecting with clients, real estate agents, and closing deals. The third mistake: set money aside for a rainy day. One of the most common mistakes that new mortgage brokers and business owners in general make is not properly managing their finances. And this is especially true when it comes to setting money aside for taxes. Many new brokers are so focused on generating revenue and growing their business that they forget to plan for the inevitable tax season. So when tax time comes around, you might find yourself scrambling to find the funds or waiting for a deal to close to pay your tax bill. You don't want to do that. This stress can take a toll on you and your business, and in an extreme case, it can even lead to your business falling apart. So how do you avoid doing this? The answer that we found is simple but proactive. And first and foremost, you just need to start educating yourself about what kind of taxes you're going to owe, and begin setting up quarterly payments by setting money aside. So consult with a tax professional, understand how much you're going to owe most likely, and set up a system to estimate your taxes throughout the year. And the second part of this is opening up a separate bank account for that tax money. So every time you have a closing or at the end of a month, immediately take a portion of the cash in your accounts and put it into that tax account. So this practice will not only ensure that you have the funds when tax time comes, but it'll also help you avoid using tax money for daily expenses of your business that really aren't meant for that. And lastly, be disciplined. It can be tempting to dip into that tax account for other things, but resist that urge. Remember that money's not a bonus, it's a liability that you owe. Number 4, be prepared for really volatile markets. Right now in 2023, that's what's going on. Another common mistake is that a lot of brokers often are ill prepared when things happen. In the mortgage industry, just like the financial sectors, it's subject to market fluctuations. Rates go up, people might not want to move forward right away. And these ups and downs can have a significant impact on, the interest rates, the demand for loans, your overall business, and being caught off guard by these changes can really hurt you. And it can cause you to make reactive decisions, which may not be in the best interest for your business. And it also can lead to strain on your relationship with your clients, because if you're needing to close a loan, you might not then provide them with the best or the most sound advice, knowing you need that closing check. So how do you then navigate through a volatile market, money being up and down? And the first step is educate yourself, stay informed about the market, and also figure out some key indicators that could impact your business. Diversify the products that you offer. So by providing a range of loan products, you can cater to various client needs who might not be affected by what's going on in the markets. That's why you became a broker, right? And another critical element of managing risk is communicating. So be transparent with your team, with clients about what the market's doing so that they understand the risks that come with the decisions they're making about their mortgage and loans. Lastly, establish a contingency plan. Have a strategy in place for different scenarios that could happen. A red flag alert policy is what we like to call it. And this plan should include steps to ensure that your business is financially stable and strategies for knowing what to do with your team or things you pay for in the event that you go through some of these periods. Remember, being prepared for different markets isn't just about protecting your business, it's also about providing your clients, your team, your family with the best of you for your business going forward. Number 5, don't chase the lowest rate. I see a lot of new mortgage brokers do this. It's a common mistake that really you can get sucked into because it's this lure of, oh my gosh, these rates are so low as mortgage brokers. And it's a natural instinct to want to provide clients with the best possible deal. The lowest rate can seem like the most attractive option. However, be cautious. Some of the lowest rate wholesale lenders can be the most challenging to work with, and it can ruin a relationship with a client or referral partner. Navigating the mortgage industry is not just about securing the lowest rate, it's about creating a smooth, efficient process for your clients from start to finish. A lender with a low rate but poor customer service, lengthy processing times, or a history of last-minute changes can damage your client relationships and ultimately your reputation. So how do you steer clear of these pitfalls? First, make sure you do your research before signing up with a lender. Look beyond the rates and delve into their service history, turnaround time, ask other loan officers who have used them. A lender with a slightly higher rate but better service may be a better choice in the long run. And communicate clearly with your clients. Explain that the lowest rate isn't always the best choice and their overall experience and final closing costs matter as well. Make them aware that certain lenders might offer lower rates but could also have additional hidden costs or less favorable actions that happen during their loan process, and get it in writing if they demand that's what they really want. Lastly, build strong relationships with a variety of lenders. Having a diverse network as a broker that you can offer options allows you to recommend the lender that best suits each client in their needs and their circumstances. By not simply chasing the lowest rate, but instead looking at the best overall solution and the best overall lender, you'll build credibility and trust, and you'll ensure that your clients return to you for future mortgages for years to come. Number 6, don't forget about marketing. It's easy to overlook marketing when you're busy starting up your mortgage brokerage and trying to navigate the complexities of our industry. A common oversight made by a lot of new business owners and mortgage brokers is neglecting marketing strategies, posting on social media, starting to set up a website and blog, and other forms of digital marketing. Remember, even if you offer the best services and you're the best loan officer, it's really of no use if other potential clients aren't aware you exist. So how do you incorporate marketing into your brokerage? First, establish a solid online presence. Leverage platforms like Facebook, LinkedIn, Twitter, Google My Business. Do regular updates, engaging content, and timely responses when people are reaching out to you online. Next, consider starting a blog after you set up your website. You could just do it once a month even to start. Share knowledgeable things about the industry, break down complex things that people don't really understand, but they're always asking. This not only establishes you as an authority, but it also improves your website's SEO, search engine optimization, making it easier for clients to find you and your business online because it takes time to build this up. Don't underestimate the power of email marketing. Regular newsletters and updates to keep you at the top of your client's mind and will open up opportunities for referrals going forward. Lastly, remember that while digital marketing is crucial, there are still some traditional methods that hold value. Go to networking events, even look at word-of-mouth referrals, which is a big part. Just don't do anything only one way. You have to do a well-rounded marketing approach. By empowering a comprehensive strategy, you can attract more clients, more referral partners, and create a sustainable pipeline of business. But Rome wasn't built in a day, so build slowly, over time, or use the help of a professional service like Collab. You can schedule a free discovery call with a link in our description if you are saying, yes, I want help with any of these mistakes that I'm hearing right now. So let's go to number 7, the last one. Don't neglect getting help and educating yourself. So one of the biggest mistakes I see new mortgage brokers also make is overlooking the importance of continuing to educate themselves. This industry is constantly changing, so staying up to date is essential if you want to have a competitive edge. Knowledge is indeed power, and the more you know about the mortgage industry in running a business, a mortgage broker business, the better that you can serve clients, the more you can grow, and that you can navigate challenges that come up. So how do you continuously improve your knowledge about owning your business in the industry? First, take advantage of the free material that are out there. Our wholesale lender partners are going to help and give you things that will help you. This will not only expand your understanding of the industry, but also keep you informed about the latest trends and developments. Then the next thing is consider attending seminars, webinars, workshops that are dedicated to the mortgage industry. These events offer valuable insights and learning opportunities, often from industry experts who have years of experience under their belt. And lastly, we highly recommend attending platforms where you can learn about how to be a better mortgage broker from professionals who have been doing this for years. For example, here at Collab, we offer a comprehensive training program that can equip you with the necessary skills and knowledge to help really make your business a machine. Remember, being a successful mortgage broker is not just about having the right tools and the right strategies to originate loans. It's about continuously learning, growing, and adapting as a business owner to an ever-changing industry. Only then can you truly provide the best service to your clients and a team and ensure your long-term success as a mortgage broker. So once again, if you want to talk to one of our experts, you can schedule a free discovery call with Collab using the link in our description. And don't miss out on the opportunity to stay ahead in the mortgage broker industry. Subscribe to our channel so you get our updates. Follow us on our social media channels, which are all insights and tips tailored for mortgage brokers just like you. Together, we can navigate the complexities of this industry. Let us be your ally in this journey to success. Click that subscribe button now and follow us for your dose of industry know-how.